Bring up the chart, if you would, Jamila. I'll get this out on GTV Go here in a bit. And on an ever weaker Rupiah, this is the 1997 crisis. Indonesia hugely hit their mark. And today, the symbolism of 15,000 Rupiah. It seems never-ending, not only for Indonesia, but this grinding weakness. There's got to be a point where these systems break, don't they?
I think that's one of the benefits of the floating exchange rates. You see what happened back in the late 90s. It was like a dam bursting. There's no dam to burst this time. And that, I think, it makes it so that rather than sort of back to your mathematical analogies, rather than a continuous function, it's really like just a step function. Goes sideways before it takes the next leg up. So I think that this is sort of typical of what we should expect for Indonesia. But I think that the general challenge is that they've got to rebuild. They've already exploited the fiscal room they have. And so that means the currency is going to have to weaken to help cheapen up those assets and to make it sort of funds available.
Mark, when you look at some of the things out there in emerging markets, what would the contagion, how can the contagion actually get worse?
Well, how can the contagion get worse? One is if other countries begin blowing up. I'm not just talking about Venezuela or Turkey, but as we talked about with some of the other emerging markets, more pressure, as well as back in the peripheral of Europe with Italy. So I think and the other factor, I think, what's driving the emerging market problems? I'd say a couple factors: Fed policy, strong dollar, high oil prices, weaker commodities in general. So I think these factors, as long as they remain, I think there's going to be downside pressure on the emerging market currencies.
Within all this is the Pacific Rim and the adjacencies of these currencies. Do you care about well, I guess I'd go Rupiah renminbi or Rupiah rupee, the Indian currency. When you were last on, you were quite forceful about the moves we've seen in India. Do you care about these cross rates, or is it only the majors?
I really don't watch how the other currencies trade against China or Korea, or even in the yen. Maybe the Korean won and the yen exchange rate, but for the most part, I think of it as a dollar-based world, especially in East Asian and emerging markets.